Happy Monday, ladies and gentlemen, Allincrypto here, and welcome back everyone for what is going to be nothing short of another jam-packed daily market update. I hope you've all had a wonderful weekend, and as always, we've got a hell of a lot to get into. We're going to be starting things off and reiterating and reaffirming really what's plaguing the markets right now, and that is the uncertainty around economic data, perhaps revisions in regards to growth, economic growth this year. And ultimately, the stock market is now pricing that in. Really what's happening is if the risks of something like a recession or something along those lines essentially has increased, you'll have a reallocation take place and certainly hedging taking place. And I think that is what is plaguing certainly the US markets right now. Trump sort of came in and introduced a lot of uncertainty to the equation. Markets don't like uncertainty, but I do think this gets resolved and that 2017 scenario plays out. So that's really where we're going to be starting the video off on. I want to replay that clip of Scott Bessent talking about the kind of detox period that we may be, or they may be, inducing. The good news on the back end of all of this, they've got plenty of room to sort of work with in regards to where monetary policy is. Jerome Powell on Yahoo Finance last week literally said, monetary policy is meant to weaken jobs and economic growth. That's what it's supposed to do, and that was induced to essentially fight inflation. So it's natural to expect that you may have a weakening in regards to economic data, but there's a revision of that could take place, and actually that revision that we've seen in Europe, interest rates coming down, has actually seen the European, or some European stock markets, the majority of them actually do very well. The DAX, the Stocks 600, and the US is yet to kind of undergo all of that. Then we got some really interesting news. Christine Lagarde really shocked everybody over the past couple of days by announcing that they're going to launch officially the digital euro CBDC in October this year. This came a lot quicker than many expected, and that's because they've been working on this for years prior whilst telling you that crypto was a scam, and ultimately we're going to use and utilize it as the rails. There's some news that I didn't cover in regards to the OCC. That have essentially now opened the floodgates for the likes of Goldman, Morgan Stanley, Citi, Bank of America, Wells Fargo, and JP Morgan to essentially sort of custody crypto and actually use it more broadly. Remember, the Bank of America CEO says once we're allowed to use and utilize it, we're going to do that in a big way, and they already are working with the likes of Ripple, etc., etc. Second largest bank in Spain, of course, has now authorized the trading of Bitcoin and Ethereum. Then we'll look at CoinShares report, as we like to do. A lot less outflows this week in regards to the last, which was the biggest outflows on record for crypto. Again, likely on the back end of what we're going to start the video off, which is the kind of macro uncertainty. So let's kick things off and let's just dive into this clip of Scott Bessent, who of course is kind of explaining very much so what's plaguing the markets right now. And everything that's happening with Bitcoin and crypto has absolutely really nothing to do with Bitcoin and crypto, but everything to do with the macro picture, which has become a more uncertain one due to things like tariffs, the data that we've recently been getting. The question you've got to ask, and you put yourself in one of two camps here, is this just a bump in the road, the camp that I'm in? Or is this the start of a recession, and ultimately markets will do not well in that context? So let us dive in to what Scott Bessent had to say.
10% of Americans are 40 or 50% of consumption, and that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down, and could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
So we'll leave that there. I really like what Scott Bessent had to say, because really what he's talking about there is exactly what's plaguing the markets. This is the S&P 500. Let's stick Bitcoin on there. These literally dance together, and that's because the same things ultimately drive these, and that's really predominantly more than anything central bank policy, debt refinance, all of this kind of stuff. Ultimately, you can see the correlation here, and you can see the correlation certainly most recently, and that has everything to do with some of the uncertainty, the tariffs, the effects perhaps that Doge may have more broadly. The question you've got to try and ask and answer is, what's the resolve of this? Is this now the top of the markets and you're going to enter a recession and they won't do too well and economic data is going to continuously be negative and there's a new trend for it now? Or is it just a bump in the road and you see that continuation? And certainly when I look at Bitcoin, also the S&P 500, just to take this off, made our inverse head and shoulders target that we initially drew all the way back at the sort of end of 2023. You can see just how perfectly this target was meant, having a bit of a pullback. I think this is a pullback, bit of a range before we see that continuation. It's going to be very telling how the stock market opens up today. And of course, that's going to lean on the cryptocurrency space, which very much dances with it because it's a part of the broader ecosystem of markets. And there is some pretty negative data. This is from Dan Tapario, and this is layoffs. And we've seen a real spike in layoffs. Now, what does this... I think... There's been a lot of economists that have got things very wrong post March 2020 and the locking down and sort of global issue that we had to deal with. And you know what I'm referring to there. That has skewed a hell of a lot of data. And people are trying to apply a historic context to an unprecedented situation that ultimately... I don't think can be applied, but this is Dan Tapario saying, macro, unfortunately, this is clear. Layoffs have never spiked to this degree outside of a recession. Fourth largest spike in 25 years and more coming. Uncertainty causing more severe slowdown than anticipated. 4% short rate can drop a lot to buffer. Liquidity spigot coming. Yeah, so they're going to have to do something. There's also a lot of refinancing. The good news is that the Fed have the room to essentially cut rates and essentially promote the economy, which will see assets, in my opinion, generally do well. I don't think they're going to leave it too late. I think they will act, but they're going to allow things to get to a point to where they can justify those actions. And if we look at what's happened with the ECB, they've been lowering their rate. It's now at 2.6%. Fed fund is still 4+%, 4.25%, I think. Look at and this is why you're seeing, I believe, Europe outperforming the US right now. It's because of their monetary policy. And we've still got to see that in the US. And I think that's what sees the stock market climb higher. And ultimately, crypto will follow that trend, but outperform significantly with all these really great fundamentals. Typically don't matter in the scheme of, or the grand scheme of economic uncertainty. Something can fundamentally be unbelievably impressive and sell off. And that's because of what drives markets, which is buyers and sellers on a day. And there's a whole load of factors that go into that. And I think it's very interesting just how panicked people are about this. Yes, it's brutal to dive over to the Bitcoin chart, but this is crypto, guys. And ultimately, the broader trend for us is still very much an upward one. And I think this is just going to be a bump in the road. This could end up being just a big bear trap, in my opinion, that we see continuation on the back end of. Let's talk about some other news. This came out from Christine Lagarde. I'm going to go ahead and play it because what this is officially confirming is that Europe has CBDCs ahead of them and they're going to start that in October. Excuse me. And this is part of your sort of surveillance finance, surveillance more broadly. Let's dive into this. This is not great news. Stablecoins really are just CBDCs. Certainly if the US is going to leverage them to maintain its dominance globally, they're going to do that. Stablecoins kind of democratize banking directly with the central bank because those stablecoins are backed up typically by treasuries and things like this. Let's go ahead and play what's coming for Europe in October.
On your second point, I tend to share your views. Nature doesn't like vacuum. And we started working on the digital euro way back. Actually, when I started my term 5.5 years ago, and I'm not claiming, parentality on the digital euro because my colleague Benoît Cœuré had already committed a speech on this matter before I arrived. But I certainly carried on with that project, and subsequently Fabio Panetta on the board and then Piero Cipollone, who has replaced Fabio, have taken the lead together with a very, very good team which is focused on accelerating the pace and hopefully campaigning enough with all the stakeholders, meaning European Parliament, meaning European Council, meaning European Commission, so that we can eventually, not put to bed, but put to reality this digital euro. The deadline for us is going to be October of 25, and we are getting ready for that deadline, but we will not be able to move unless the other parties, the stakeholders, as I call them, Commission, Council, and Parliament, actually complete the legislative process, without which we will not be able to move. And I think it is critically important, and it seems to the agnostic or the skeptics, it seems to be more relevant and more of an imperative now than ever before, both on the wholesale and on the retail level, both.
Big. Probably not what everyone wants to hear, but your surveillance, finance, singularity state, digital prison cell is literally being constructed for you. As somebody that's an entrepreneur, and I have been from a very early age, one thing I think in the future that is going to do very well is actually a return back to nature and kind of retreats and things like that offer that. Anyway, your CBDC in Europe is coming. In America, they vowed to never allow one to take place. However, they'll essentially enable the same thing just with stable coins. There was some big news that I actually didn't get to cover on the past couple of days, and that is the OCC reaffirms that crypto asset custody holding deposits that serve as reserve backing stablecoins and the use of distributed ledger technology and stablecoins to facilitate permissionable payment activity and permissionable in federal banking system. So this is huge. Let's go. Banks using USDC coming soon to blockchain near you. We are very excited about wiring up the existing financial system to a new internet financial system. Circle Mint is open for business, and of course they do the majority of their volumes on XLM, but there's going to be multiple competitors, and ultimately Scott Bessent, who we looked at a clip of at the start, basically said that's how the US is going to maintain their sort of fiscal and global dominance. Trump's portfolio is $110 million down. Now, I wanted to share that, their World Liberty Fi, just because it may make you guys feel a little bit better. Also, some very interesting news in regards to Spain's second largest bank. They've essentially granted regulatory approval to offer Bitcoin and Ethereum trading services to customers. It's very interesting that all these banks are now being allowed to enter, and the price of the cryptocurrency space is doing what it's doing. It's almost like they're getting a discount on everything and perhaps manipulating, and markets are absolutely manipulated. Price action so that they can essentially get a better price when they enter the space, which we know is absolutely coming. And they could absolutely take it lower. It's really all going to depend on how the stock market opens up today and what the kind of broad economic context is, which is still uncertain. I think once we get that certainty, things will recover and continue in the broader trend, which is an upward one. Let's talk about CoinShares' report. We like to cover this every single Monday. We can see this is volume 224. Negative sentiment continues with outflows of $876 million, a sign of capitulation. Interesting. Digital asset investment products saw their fourth consecutive week of outflows totaling $876 million. Bringing total outflows over this negative spell to $4.7 billion. That is huge. Regionally, US investors were the most bearish, pulling out $922 million, while most other regions saw this as a buying opportunity. Very interesting. Certainly, isn't that interesting as there's lowering rates across the board other than the US, and we looked at how the European stock market is essentially doing on the back end of that. Bitcoin was the primary focus, seeing $756 million in outflows last week, although short Bitcoin also saw outflows of $19.8 million, suggesting investors are close to capitulation. And you can see this is the kind of where it came from. Obviously, Bitcoin bore the brunt. Ethereum, very heavy. Multi-assets actually saw inflows. So did Solana, so did XRP, so did Sui. Cardano saw outflows, and the others generally did. Let's look at the take here. Bitcoin was the primary source of focus, seeing $756 million in outflows last week, although short Bitcoin also saw outflows of $19.8 million, the largest since December 2024. A wide range of altcoins saw outflows too, notably being Ethereum. I don't think Ethereum does well this cycle, by the way. Tron, interestingly, and Aave. Conversely, Solana, XRP, and Sui continued to see inflows totaling $16.4 million, $5.6 million, and $2.7 million. Obviously, they're talking about Sui there. Solana saw the most, then XRP. Blockchain-related equity ETP didn't escape the negative sentiment, seeing 48 million in outflows last week. Now, the bad news here is, of course, we're seeing outflows. The good news is, you want to buy when things are low, not high. Also, outflows will typically lead later on down the line to inflows. So that's really it from me. I'm going to love and leave you all. Hang in there, guys. It's my opinion, and it is just an opinion, and I could be wrong on it, that we're not going to enter a recession this year and that markets will continue to climb. And I think what we've got at the moment is just some bad weather, to put it nicely, that ultimately gets resolved and we start to see all the technical confluence that we've got for the cryptocurrency space come to fruition. We just need to get clarity on that, and we need to watch data, certainly for a worsening in it. What we would want, and we've got CPI, I think, on Wednesday and I think that's going to come out lower than expected, in my opinion. Some positive data that's going to sort of usher the Fed on in a non-destructive manner, if that makes sense. That's it from me, guys. I'm going to love and leave you. Thanks for watching, as always, and I'll see you all in the next one.